Hello and welcome to the second episode of SALT Dash. Today we're going to cover three topics related to income tax, sales tax, and motor fuels tax. First topic is income tax related to Indiana Letter of Findings on amended consolidated returns. The taxpayer and affiliated group filed an original 2010 and 2011 consolidated return, including only two of its entities of the affiliated group. The taxpayer then amended those returns to include the third entity, which was an IP company. The amended returns resulted in a $270,000 refund to the taxpayer. The DOR audited those returns and at the conclusion of the audit denied the refund on two determinations. One, they determined that the taxpayer did not file a consolidated return but actually filed a combined return. And two, that the taxpayer included the IP company incorrectly because the IP company did not have Indiana-derived revenue. The taxpayer then filed a protest, and at the administrative hearing, the findings came out that the taxpayer actually did file a proper consolidated return, that it did not file a combined return, because to file a combined return, they would have had to assertively put forth a petition requesting combination and the DOR would have to approve, which was not done. And two, that the consolidated return they elected to be filing as consolidated. And the hearing also concluded that the taxpayer properly included the IP company because the taxpayer exploited the IP within the state of Indiana, constituting situs and giving rise to Indiana-sourced revenue. What is the takeaway here? The takeaway is that this is another example of a state attempting to assert alternative positions on nexus and sourcing, etc., in opposite to those positions asserted against other taxpayers. Because here, Indiana has a history of consistently asserting that IP exploited within the state gives rise to Indiana-sourced revenue. Second topic, sales tax, relates to Hawaii's Remote Sellers Act. Hawaii is encouraging remote sellers to collect and remit use tax for products sold to Hawaii residents. Remote sellers are not required to collect and remit. So to entice them, they put forth legislation that has two parts. One, they are making it simpler for the remote sellers to collect by only requiring them to collect the state rate of 4%. And two, they're allowing the remote sellers to keep 2% of the overall use tax collected. In addition, the Act also provides for an amnesty for any remote seller that may have had nexus in the past and may have Hawaii state tax liabilities. The takeaway is that this is an interesting legislation where they're enticing remote sellers to help the state increase its compliance with its use tax. And the last topic up is motor fuels related to Mississippi's environmental protection fee. The protection fee is imposed upon distributors who sell motor fuels within the state. The fee is then put into an environmental protection fund. When that fund hits $10 million, the fee collection and remittance is suspended until the fund goes down to $6 million. Once it goes to $6 million, it's reinstated. So the takeaway here is that the state has hit its $10 million cap. The collection and remittance of the fee is suspended starting March 1st, and they do not have to collect and remit up until the point where the state alerts them that the collection is to be reinstated. Thank you for tuning in to the second episode of SALT Dash, and remember, salt matters.